All right, so let's go into Felix Confluence, Felix past strategy and Confluence trading. How do we go? Two major things that are divided into trend and structural bias is the first thing, and second is point of interest. Very simple. Okay. So now, of course, I have my key levels marked, so I'm not going to go to those details. If you want to know much about how I mark my key levels, means horizontal key levels and all of that, of course, you want to be part of our community where you learn more detail about how to go about it. So, but here, I'm just going to all the structural, key levels, structural bias and all of that. So first thing I look at, irrespective of the time I want to trade, I probably want to go into checking, okay? I probably want to go into checking my trading bias, okay? Let me remove this buy. Yeah, delete a lot because it's already done. Okay, so now this is Felix. My simple strategy is not too difficult. And so what I do, structural bias. Now, what you want to do, there's some market that's going to give you straight away, but there's some market that will not give you straight away. So very quickly, I'm going to go into my structural bias or trend bias as it were. So let's go. Ignore all of those charts you're seeing. So this is Bitcoin. So I take any instrument I want to check. So this is Bitcoin, for instance. If you look at Bitcoin, it's a little bit sideways for some time right now, but overall it's an uptrend, okay? Overall it's an uptrend. So what we'll look at is that we're looking for a buying opportunity as it were, but overall it's an uptrend. Now here, I want to go to the last structure. So first thing I'm looking at the market to continue buying, right? So then what I need to go to, having identified my trend bias or structural bias, or probably so why Bitcoin? Actually did analysis on Bitcoin with some group previously, and so that's why I have to just take this. But me, I do area of my currencies, and then I pick the one that have a very nice structural strength for me most time when I'm looking at the markets to trade. Okay, so I'm going to take an instrument that probably is going to ease your understanding. Okay, so this is Euro USD, for instance. Okay, Euro JPY. So let's look at it. These are an uptrend on Euro JPY on daily time frame. You can see my horizontal key levels. You can see how my horizontal key level have been on weekly and daily, and so we've seen that and all of that. So what do I want to do? I have to go to the last point. Okay, so here we go. First, I want to identify it's a trend. Then I want to see structure. All right, it's a trend. Then I want to see structure. So quickly look at it. This is the last point, so which is going to form a resistance. Okay, that's part of the thing we talk about, the price action. All right, resistance and support. So this is a resistance, or you can call it a supply zone, and that's the last structure. All right. Now, where was the structural broke? Where was the structure broken from? All right. So here is it. The market, what gave birth to this high, got broken from this. Okay, so let's quickly look at it. This is this. Okay, so this is the break of structure that move here. But there is an origin. So that's what we talk about. A place where the market started from, what gave birth to it was actually this gap. Now, sometimes one may want to say market should come back and fill this gap. Not in all cases. You have to understand it because the structure is what the market respects so much. Yes, fine. All of these are still point of interest. Okay. So, but the structure. So we have a high. So we have a high. We have a low. Then we have all of these at the journey move. Okay. Now, so high and low. So altogether, that point of interest, right? So the market broke up to this point. Now on daily, so I have a structural breaking here was broken. So I want the market to return back, but you can see my horizontal key level. This is why most of my market you see my horizontal key level being marked, because you wouldn't have a point of interest. Your eye will practically, I can tell you honestly speaking, your eye will practically be targeting this gap to be filled. Yes. But because I have my horizontal key level and market got that to that point. So now I haven't checked my first, the trend direction. Then I want to see a recent break of structure, and so that I can spot point of interest. So definitely this gap is a point of interest. Okay. And of course, this up here is a point of interest. So the market has actually come down and do all of this. So we are here now at two things we should be expecting here. What am I expecting here? So when the market is going to open, look at what you are looking for. When the market is going to open in a new day, on Euro USD, Euro JPY, all right, Euro JPY, what the market is going to open is number one, is either we sweep liquidity because this is resistance. Now, these are external liquidity. We are at the verge of external liquidity because we have internal and external liquidity or structure, as it were. So here you have a break of structure, and then there's a root, the beginning, the origin that gives birth to the structural breaking. Now here, the market have retested back to the top of this and bounce, and that's a fantastic one, right? Now, so what you're looking for is that, so that is to say, here, if you look at this up here and here, is going to be my daily range. So I'm going to step down to 1 hour, or sorry, 4 hours. Now, here I'm envisaging that, okay, these are top of the market. It can be swept. Liquidity can be swept up here, and then we can trade back to the range here. So I'm going to go to 4 hours. Very simple. So let's look at it. This is what we call top-down analysis. This is called what? Top-down analysis. Okay, so where we go here. Now, ordinarily, if we look at where we are here, there's an internal structure. So we have a downtrend, now we have an uptrend. So there's an internal structure. This will be a pullback because overall trend is an uptrend. This is a major pullback. So structural, internal structure. So let's look at it. The last low we have is here. Okay, so I'm going to start from there. So where we have the last low here, where was the market broken from? For this low to happen, it broke from here. So this is a break of structure, okay? So all of this point here, down to this point, this is a break of structure. So if you look at it, a break of structure that happened here, so you can quickly just move this point and see another point here, okay? So the market come down, and then we have an internal change of character here, internal change of character or market structure shift. So internal change of character, then what gave birth to that character shifted? It's actually this. This is the origin. Now, understand that the last bearish candle before the market start moving was actually that. So this is the major one altogether here. So you can see altogether here. That is the one. But if you want to find a trade with 4 hours, probably you're going to check this. So you're going to check this last candle before this impulsive move. So that's what you're going to mark. Look at it. This impulsive, before this impulsive move, here you have. So the market returned back here, and you have a good move. So if you're going to enter here, your entry is going to be here, and your stop loss below this previous candle. Now, so that's on 4 hours. So let's quickly go. Then we have this, the market break structure. This is a break of structure. This is a change of character. This is a break of structure. Now, where is the origin for the break? Okay, the origin for the break is still the same place that this market returned back to, right? But now you're not working on this. You're not working on this. So here we go. This is the one that gets back to this move radically. Okay, so you expect the market to return back to it. Now, it didn't tap into it properly anyway. So you have the market return back to this point, and then you are looking for an entry. Now, perhaps I work with Confluence. Okay, so Confluences are what I work with because I look for A+ setup for my entry. So here we come. Here we come. The market actually had returned and never tap into this, but it only tap into this FEG. Can you see? My Confluences are very powerful. Confluences like what? Imbalance, break of structure. Confluences like imbalance, break of structure, liquidity. So we have an imbalance swept in here, and then the market rigmarole there, and we have a move. Now, the most important thing here, we come here. The next thing is that we have another break of structure here. Fantastic. Now, where's the origin of this massive move? Let's take this. Okay, we can give it all to this, or just this last candle, not necessarily a bearish candle now, but a low kind of volume before a massive move. Okay, so this is going to be my point of return that the markets return to. Now, let's look at it. Inwardly, if you look at this, now market never returned back here. Did it? No, because this is a break of structure. After the structural break, the structure got broken. You expect a retest back to the origin that formed that. This is unmitigated 4 hours break of structure. Okay? And 4 hours order block. These are unmitigated point of origin. So 4 hours unmitigated break of origin or origins. Okay? So now, where we go, the market continues to move. We have another break of structure, very tiny over here. We have a break of structure here. So you expect the market to return back to another origin here. Okay, so now this is another break of structure. So what you expect here is this. Follow me. It's a simple movement. Then you don't need to rush yourself. This is another origin that the market ought to return to. So we have two unmitigated points. The market just continued to go, which is more or less like a void, liquidity void. Then the market continued to move. Here we are, the last break of structure. We have another one here. We have another break of structure here. Okay, this is 4 hours. We have another break of structure there. Then the market continues. So I told you that what you're having here now is a supply zone. That's a resistance. So what you want to happen as the new market open is that the market should break this and fake out and return back to this zone. Then that means you want to be looking for selling opportunity, or the market should break and return back to this origin for you to buy. Okay, so you have already have this, all these points I marked out. We call them what? Point of interest. They are called what? Point of interest. So now quickly look at it. We move forward. So we move forward to go back to 1 hour to refine the market more properly. Now going back to 1 hour, look at it. So returning back to 1 hour, we still have this. Okay. So returning back to 1 hour, so we still have this. This is still a break of structure, or you can go more deeper internal liquidity. I don't like doing much on the thing that had passed. I always like to do more on the things that I'm still looking forward to happen. Okay, so we continue to have a break of structure here. This were mitigated. We have another one here. This was mitigated. So we have not had another one. So you're waiting. So meaning that on 1 hour time frame, so you have already a mitigated break of structure. So I wouldn't draw that. Then you have another break of structure. Okay. Okay. So then all of that. So now we go to 30 minutes. So let's go to 30 minutes. Some refine up to 2 hours. I don't have too much time. I just move on to timing. Now you have a break of structure here. I think this was mitigated, right? You have another break of structure here. Yeah, here. This was mitigated. Then you have this 30 minutes. So last point I'm going to wait, except on unusual issues happen, I redefine my market, especially when market is taking a reversal, I go to 5 minutes. So this is a break of structure, okay? And then this was mitigated. This was mitigated properly. Then we haven't had the next break of structure before we have, this is a resistance. So what are we going to look at? You can see the break of structure for 4 hours break of structure unmitigated. We have another one here unmitigated, okay? Was this actually mitigated? I think so. So we have an unmitigated break of structure here. So what am I looking for this market? Good. New day, new week is going to open. It's either we sweep liquidity and now start to have a reversal. Now, when we sweep liquidity, see what I would do. When we sweep liquidity, this is very simple, right? When we sweep this liquidity, so you can keep this structure, okay? When we sweep this liquidity, what I want to look for is to go to 5 minute time frame, 3 minute time frame, 1 minute time frame to see a change of character, right? That is a market structure shift. Then I will be selling and targeting to take profit here, and then maybe have another bounce from there. You can see how it's good to have your market map with top-down analysis. I'm done with this one. So this is Euro, what's it called? Euro JPY. Okay, so now let's go to, this is GBP JPY. So GBP JPY, first thing, what am I identifying? Structural change or trend. Okay, identify trend. Now you can see that this equally is an uptrend. The last break of structure was here. Similar gap was created. Okay, so that is all together, all here, a point of interest that you expect the market to return back to. Here, it's already a kind of resistance or supply zone where the market first stopped. Okay, so that means this place was actually mitigated because we come down to this and tap in, probably go up to the gap. So let's look at 4 hour time frame. Now, is it my instrument? If it's not my instrument, I wouldn't have time to start, actually checking that. Okay, so here you go. This is a break of structure, and then the market have all of this point, from this point to all this gap, as a point of interest. So let's look at it. So if you look at it from here to this point here, yeah, I think it was mitigated to an extent, but not fully. All right. So the market is it what it is. And probably I want to go down to lower time frame. If you look at the internal structure you're going to find is very simple too. We have a break of structure here, and then we have the market to move up here. We have change of character. We have a break of structure mitigated. We have a break of structure unmitigated. Then I've gotten another one here, not really, because I always like my body of the candle to close. So here you have a resistance here, or the market to return back to this order block to get it mitigated and all of that. This is the simplest way of getting yourself into your trade and then making your money as it were. So I'm not going to go too much detail about this. It's just to teach you what to look out for. Now, let me give you an example. Why do I enter AUDJPY and we stay there for a very long time? Okay, now we have just crossed TP1 and up to now we're still hanging, right? This target was targeting 275 pips. Now, if you go to on daily time frame, very simple. Now, first, you look at it. What do we have here? This was properly mitigated, fantastically mitigated, right? So here we go. So here we have a break of structure. Here we have a break of structure here. This is a break of structure to the upside, right? And the market move as massive as possible. Here was the origin, which I said the gap that was created certainly must be filled altogether with this. Then we move up here. So let's go this way. So if that's the case, so here we have the break of structure to the up, and then the market moved massively down, all right? And after moving down massively here, we have, so we have like a mitigation, all right? And then what happened? We rally up. Okay, we have another market move here. So, but good enough altogether here. So if I take off this, okay, so we have the market move massively because altogether down here and mitigate this. But what I wait for is that I do not actually just enter market as anyhow, because it's going to confuse you at this point. That's why you come on higher time frame. At the end of the day, what I actually look for on the daily time frame, you can imagine waiting for this market for as long as possible, and then this is a long candle. Now, what happened here is what we call power of three. So there was an accumulation of candle, and there's a manipulation, and this is the continuation. Some just get into the market with this candle, but we want to go to a lower time frame to actually be able to analyze where to find a proper entry. So let's go to 4 hours time frame. In a 4-hour time frame, so what we're looking for is very simple, right? So here we have on the 4-hour time frame, we saw that the market actually shifted. So let's take off this. We saw that the market that left this point unfilled actually went up. We have a break of structure here. We have a break of structure here. And then I think we have a minor break of structure here. So we have a change of character. So if you cannot see it, I'll show you properly. So you have to open your eye to see this is a break of structure. And this is another break of structure, perhaps. Then you have another break of structure, more recent. Okay, sorry, I beg your pardon. So in this break of structure, we have a change of character here. And so this is a change of character. Now the origin that brought about this change of character was this candle. And so if that's the case, so that means this is the origin. You want the market. And you need some fantastic thing here that give you more confidence. I told you I always have my horizontal key levels marked, and it's at that point. So it's already giving me some kind of level. Yes, fine. I'm not saying you should have your key level mark like mine, but I think its expedient is good if you can do that. But if you cannot do that, it's not compulsory. That will not stop you not to see market. It's just for you to understand the market structure properly. Now we have this tap into it. That's a very massive sell for you. Very, very fantastic, right? So that sell, we have this. So this is a market structure shift. This is a break of structure. But on the market structure shift already, at the return of it, had given you that entry. Okay. Let's take off this. So on this 4-hour time frame, swing traders, of course, targeting going down to this point. So we have a break of structure here, and market even didn't return back to the origin. Okay, because ordinarily this is the origin. So the market moved massively, sweep all of this down, and tap into this imbalance. All right. As it tap into this imbalance, we have another massive move up here. So this massive move up here again, right? So this is a break of structure. We have this break, then massive down, the market move up, down up here. So here we have this. It created an internal swift of the market. Then we have another return. So never return. So we have a new break of structure. At this point here, we have a new break of structure to the downside. Now this new break of structure, where the last point that actually gave birth to this, we can actually see this point actually give birth to this break of structure. You have this. Now the market return back here and sell down. So of course, you are at a very important key level, and then you want to see the market to sell down to this point. But most time when you enter the market, I would say the first thing that is your target and goal is to have 1:2 risk reward minimum, and how the market actually sold down to this point. At this point, all the gap has been filled. Now, so look at the internal structure. The internal structure of this market, very simple. Haven't traveled down to this point. We have this low here, okay? We now have this low here, very simple. So we have this low here, as simple as possible, right? So if we have this low here, what do we have? You're going to look at this structure here that the market moved. So the market move, it actually did not break that structure. So what broke this structure properly was this one. So we have the break of structure. So let me take off this. So at this point, you can see this is this market, right? We have a swing high here. So this is a break of structure internal. That is a change of character. Look at the change of character. Then the change of character, the last important point we have here, this candle, and we have all these ones. So all of them put together, so that gives you an area of interest, which is called the origin, point of origin. Then the market returned back to it, and you see that that was where we bought from. Now we bought from there. It has been struggling all this while. So what we expect is this. It has broken a new structure now. So let me take off this so that you can see the market properly. So it has broken this structure now. If you look down, where do we have some area of interest? That means this market is going to travel, maybe just a little pullback, was going to come back to this point or all of this. Where was the structure broken from? Here. You can just do minor move or here and then continue moving up. So that means we're targeting to return back up as much as possible. And that was why you see when we entered the market, we target this, and that should be giving us how much? 275 pips. Okay, so if you go to 1 hour, you give you more refined look and of your structure to be described. I'm sure following this again now, you can always now identify how I mark my structure, and it is very important. That's the foundation and the most important aspect of your trading. Okay, if we're going to go into the detail of this one, we can now further break the structure and see your little entry, 1:2 risk reward, and all of that. Okay, so if I stretch it further, you can see this going down to your last point of 15 minutes to find your, if you're a day trader, intraday trader, 15 minutes is better for you to take your trade. You see a break of structure, never filled, break of structure, filled, and all of that. So that's the market continue. So that's at about AUDJPY that you see we enter to, and we're still waiting. I think the similar thing happened to SNDJPY. So SNDJPY, if you look at it, we're in a trade on it, and the trade still continue. Can you see now? It has turned to a swing trade. I probably will not do this so much to just be able to arrive to something insignificant. Now, I was analyzing Bitcoin previously, and I show people this. Okay, so now let's look at Bitcoin. So we have Bitcoin here. Now we have a break of structure to the downside here. Here you have this of Bitcoin. And now we have the last point here. So if you look at this last point, so what do we have? In this last point, we have a change of character for Bitcoin on daily time frame, which was this candle. And then we move up here and create this massive high. This is a very crazy high that it created. And then what happened? We return back to this origin and then start moving up. So here we have not had any break of structure for Bitcoin. So the last break of structure we had was this, because this is a low. And then, so that means I'm going to go to a lower time frame for Bitcoin. So let me go to 4 hours to see more structure, but you're just envisaging that the market should be traveling up. So if that is the case, very simple. So if you look at it now, this is the low. Looking at this low here, I'm sure you can see it. You can see the low here. So if I mark this low here, which can form a kind of support for me, right? Down here, I have a break of structure, which was identified properly. So if that's the case, I have different points of interest here because it can be confusing sometimes. You have this is the beginning, the origin that prompted this massive move for break of structure. All right, you see that? Break this structure, and then it actually tap into, severally tap into. Can you see the market return back here and tap in? You are taking another trade. That brings another break of structure over here. Look at it here. This is a break of structure, very massive, right? Pam, and then it has given what you want to give. 1:2 risk reward. You have known what you want to do. Then the market return back again and tap into the origin. Now this time around, this is no longer the origin. This has turned to a support zone. Okay, this has turned into a support zone. So once the market have tapped into a place over and again, that makes it a kind of what? A support zone. So if this is a support zone, that makes a lot of sense, right? So here we go. This support zone had been heated, and I expect that the market is traveling back there too. Now I'm going to go to a lower time frame than the 4 hours, which is 1 hour. So I'm moving to 1 hour here. So very quickly, let's look at it. You're going to see a more structural move again, which can prompt your entry. So this is bouncing from the support, bouncing from the support. So here we have the last low, and then we have the break of structure over here. Okay. So this is a break of structure, and then we saw this point as the last point that bring a massive move up here. So if that's the case, I have this, all right? I have this that prompted that move as much as possible, which was tapped into, and we have a massive move up. Fantastic. Market structure is broken again here. Look at it. Then the market continues to move after entering here. Okay, this is a break of structure. This one. Now another break of structure that happened here. The origin again, it's no longer this one. And where is the new origin? This is the new origin here. And then was tapped into. Massive, right? Very fantastic. Now, if I stretch it further, what am I going to have again? I have a new break of structure. Very simple. Now, this is a new break of structure. Here we have it. And where is the new order? Now, we have several order. We have this point, and we have another point here. So if I move it up here, let's look at it. We have different point here. Beg your pardon. Let's do this way. Okay, so look at another area of interest here. Okay, then or possibly just this one. So sometimes you can pick some area of interest because the market is so choppy. Then when market move, now a new break of structure should happen where now we have this high. Look at this high, this one, this high. Now this high now just broke structure newly now. So that means Bitcoin probably should return back to this point. This is a new point of origin, this point here, and then stretch out. So this has not been mitigated. This is 1 hour time frame. So we go further. All these have been mitigated. So let's go to 30 minutes to see what will happen again. On the 30 minutes, we still our normal break of structure, and the origin can be redefined, probably like this. And then you can find another small point here. That means you are looking at it's possible for the market to come back here. So you have to see all of this point very well, so that when the market returns, you can always see it as much as possible. So that means we are waiting here or here to actually buy Bitcoin now. So, but the way it's going now, so let's go to 15-minute time frame, probably to see if we're going to see another break of structure. So here we have, this is the latest. Then the market has pulled back, but we have not had a break of structure newly, but we have a pullback here. So if we break this, that means you are looking at this as another new supply zone, okay? So if the market break this, then that means you'll be targeting on your 15 minutes to find a new entry at this point. So you can see all of these points you're targeting to find a new entry. So if Bitcoin suddenly just moved down to those points, you will not be surprised because you expect it to happen anytime, and then you'll still be finding. Remember, this was the last high that formed like a kind of resistance. When you break it, that's another journey for another time. Ladies and gentlemen, this is how you mark, and you will not just jump into the market anyhow. If I show you something now, you'll see a trade I've taken on all of those dimensions. You'll see that there's a trade running on them now. Let me just open up to this point. You probably will see what I'm telling you over this point. This is a trade that's running on Bitcoin. This is Bitcoin. Okay, so let me just refresh it. Okay, so I have positions in Bitcoin that is running right now. Just small positions that is running right now. Let me pick it up. Let's pick it up. Come on. Don't waste our time. So let me just refresh the page. So this is how you mark your structure. I'm a Confluence trader, and I love to mark my structure so that when I find an entry, I can put my stop loss appropriately. But if you don't check those confluences, all right, it can be very traumatic, because sometimes what you are checking, you will forget other aspects, and they'll say, why is this market misbehaving this way? It is not misbehaving. There are certain things you didn't put into consideration, and that's what the market is reacting to. So market react. Okay, so I'm on $80 profit right now. You can see all of those positions I entered, just 0.01, 0. So in fact, even this one I didn't put stop loss. You can see that I'm about $80 profit right now on this market. Are you getting it now? Bitcoin. Okay, so it is important you understand the dimension of the market. So like I just told you, that this is what? A resistance, right? This is a resistance that you want market to break, and for you to find another dimension. So do you get it? So as it were, so you still have this as a point of interest, because this is a break of structure. This is a point of interest. All right. Then if you look at another break of structure that happened before then, this is another point of interest down here. So give and take. So if this structure is broken now, you are now going to have this point here as another point of interest. Do you understand? So this is how you practically trade without having so much issue. Are there chances that you will lose money in some of the entry? Why not? You will be in drawdown, you will lose money because maybe as at the time you are checking your all of those things, you probably didn't look at it very well, and then it now tap into your it hits your stop loss. And that's why I said I'm a Confluence trader. I trade with Confluence, checking two conditions to identify my A plus setup. And so with that, it will reduce my excessive loss. Even if I hit stop loss, my refinement will reduce my loss exposure. That doesn't mean that I will not hit loss. Okay, so the same principle I use here. You can see now this is a trade that's already going on. How? Look at it here. Very simple. On 30 minutes, what do I find here? So on 30 minutes, what do I find here? So look at it. This is a break of structure, right? This is a break of structure. And maybe I actually find this one on 15 minutes. And look at this, a break of structure. I haven't break this structure here. I find this point of interest. What happened? Market return back to it. And what? It's selling down massively. Okay, this is what we have used for this, because this market ordinarily, if you go to daily time frame, it was a practical downtrend, a very massive one that I even run a channel. Look at it. So you may be forced to ask me, how do you run the channel? Look at this, is up here, right? This is another one. This is another one. So the market is purely downtrend. You can invariably tell me, and I've said that the market is going to come down to this point. Chances are there. That's going to be a massive one. So you can imagine somebody who have run this trade. These are how you can hold trade sometime. Look at it. How can you hold trade sometime? Look at this market. Look at this structure. So what you need more in market is structure. So look at this structure now. So this is daily time frame. If you check this structure here, you see that this is the lowest you see in this at this point of this trend, and then this market has moved. And then we have a break of structure. The market move here. This is a break of structure, right? This is another break of structure, okay? And then you have the origin, a return back to it. All of this up point here, they are break of structure all together, okay? Massive break of structure. This other block was never filled, okay? So I'm not going to go into this choppy because it's going to be summarized, so because too bulky. So let's see this. Okay, this is a body of the candle, break of structure, and now it actually returned back to this origin. That makes a lot of sense, right? Look at it, return back to the origin, and then have a massive move up, very massive. So this is a break of structure. Look at it. So that's a massive break of structure. You expect the market to return back here. So we have this point as an unmitigated, all right, origin. This an unmitigated origin. Can you see now? So that's one of the funnest thing about market. Now, unmitigated origin, don't think they will not be mitigated, but if you don't pay attention to it, you may not know. So these are not mitigated origin. The market continues to move up, break another structure here. Look at it here. If you trade by structure, you will enjoy your trading. So here we have this. The market move up. So look at this. This is point origin here. Okay, so the market returned back to the origin, mitigated the whole thing, make a lot of sense, and then we have another move. This is a break of structure. Okay, then you have a point of order which never did. Now, when you come, you are much interested in this last break of structure. Fantastic. That's the last break of structure. Where was the origin that moved to that break of structure? Here is the origin. So let's take this one. Here is the origin that break that. So what you're expecting now is that this is where you are not careful. What you're expecting is that let the market come as usual to mitigate. But this time around, what happened? The market crossed that point. So you are careful. So here was another block. But at this point, the market got broke it and never give you an entry portion, which means it has turned to a breaker block. Why? So here we have, this is a break of structure, right? And it has turned to, this candle has made it to become a change of character. So change of character. So that means here has turned to a breaker block. So the market returned and got rejected here. That means it's a breaker block. So you are entering from that breaker block. Now here it caused a break of structure. This is a break of structure. So this point, this is a break of structure. So this candle caused a break of structure. So the whole candle here now is a point of interest for you that form an origin. Here you have this that form what? An origin. So you have the origin formed and the market rally back to it as massive as possible. Then you are looking for a sell. So that's another break of structure here. Look at it down here. This is a break of structure. Okay. And then the origin was formed here. The market run to it. And then you have another break of structure down to this point. Look at it here. Okay. The market again ran back. So you have this order here. Then eventually the market was now making this point to be a support, low or true support. And then if you don't know what you are doing, you are going to be struggling with this type of market. Seriously, you won't know what's happening. Of course, definitely many of us will be buying this one and then be buying. Unfortunately, look at what happened. The market created another crazy move. And then we have this, we have this, we have this, we have this. Now the market has rallied up as if the journey has finished. We now have a new break of structure to the downside. Now you expect that this break of structure, the markets rally back to it. Never. The market did not do that and then return here. So that's the beginning of a new journey on this market. And that's what you're seeing here. So as far as this market is concerned, it's going to continue going down. So somebody who had observed that will have been in this market from this point. For instance, from this point, if we check the swing trade from this point now, let's look at it. So where we are now. Okay. Okay, let's look at it here. Let's even take from here. Wow, this is 27,000 points, 28,000 points. That's how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Okay, if you can count it from here, since September, it has been selling down. Since September out to now. So 27,000 points. Imagine you use 0.01. So that is to say 0.01, let's calculate, times 27,000. So let's look at it. There's somebody who used 0.1. So 27,000. 27,000 points multiplied by 0.01. That's about 270 bucks. Now if you use 0.1 multiplied by 27,000. So that is a whooping $2,700. So ladies and gentlemen, this is the simplest way of you trading the market without stress. So structural bias, that's trend bias. Then the next to look at the point of interest. And my point of interest array from other blocks, fair value gap, liquidity sweep, and all of that. So this is how you trade. Pay attention to reward the video again. You want to be part of our community, inbox us. Go to the comment section, pick the link, register on capitalxtend, fund your account, and you can be part of our trading community. Thank you, and do have a nice time. Bye for now.